Companies everywhere are racing to add crypto to their balance sheets. For a long time, the focus was on Bitcoin, but the attention is now shifting towards the corporate accumulation of altcoins, particularly Ethereum. Many companies are now realizing Ethereum's potential and adding ETH to their corporate treasuries. And as we've seen, this has helped ETH's price to skyrocket in recent weeks. That's why today we're digging deep into the top 5 Ethereum Treasury companies, including what they are, how they work, how much ETH they've acquired, and what this all means for ETH's price. My name is Guy. Stay tuned. Before we begin, you need to know that I'm not a financial advisor and nothing in this video should be considered financial or investment advice. This video is simply intended to inform you about 5 of the biggest ETH treasuries. So if that sounds good to you, decimate those like and subscribe buttons and pound that notification bell too so you don't miss our next one. Now, let's start with a quick recap. Back in 2020, Michael Saylor, then CEO of MicroStrategy, now just Strategy, purchased $250 million in BTC, despite the company having no previous links to crypto. His motive can be summed up in one word: inflation. Saylor was hyper-aware that the firm's treasury was losing value and saw Bitcoin as the solution. Ever since then, Strategy has regularly added ungodly amounts of BTC to its reserves. As I record this, Strategy is sitting on a stash of almost 630,000 BTC, and its MSTR stock is up by over 2,700% in the 5 years since it started accumulating. Not surprisingly, many companies have tried to emulate Strategy's success by buying BTC over the last few years. Recently, however, companies have shifted towards altcoin treasuries, seeking greater upside than with BTC. And the most obvious altcoin of choice is none other than Ethereum's ETH. So, how do these Ethereum treasury companies actually work? Well, each one is slightly different, but most follow the same core model. Raise large amounts of cash, then buy as much ETH as possible. Usually this is done by issuing stocks and convertible debt, meaning debt that can be converted into stock at a later date. The difference, though, is that unlike stockpiling BTC, stockpiling ETH lets these companies earn more ETH through things like staking. This enables them to grow their holdings far faster than if they'd chosen Bitcoin, which generally offers no native yield. But why would investors decide to invest in an Ethereum treasury company instead of simply buying ETH? Well, there are a few reasons, including regulatory restrictions or even a lack of interest in direct crypto exposure. The biggest reason, however, is something called the multiple on net asset value, or MNAV. For investors to choose a company's stock over holding ETH directly, the firm must have a positive MNAV, meaning it outperforms ETH and trades at a premium. This makes the company highly attractive to investors and is extremely bullish for its stock price. Now, MNAV might sound complicated, but it's actually pretty simple. Let's use Strategy as an example, which we'll remind you holds nearly 630,000 BTC. At today's prices, that's about $77 billion, yet the company's market cap is $110 billion, 1.4 times its BTC value. So, that gives Strategy an MNAV of 1.4x. Easy, right? Now, for ETH treasuries, the concept is the same, but amplified. Since ETH is poised to outperform BTC significantly, companies stockpiling it will likely see their MNAV levels supercharged. And this creates a positive feedback loop. A higher MNAV attracts more investors, giving the company more capital to buy more ETH. This increases the company's value, drawing in even more investors, and so on. And if you want to start stockpiling ETH of your own, or any other crypto for that matter, then you have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges. These deals won't be around forever, so take advantage of them while you can using the link in the description below or the QR code on the screen. Now, with all that in mind, let's start with the largest Ethereum treasury company, Bitmine. Incorporated in 2019 as a publicly traded Bitcoin miner, Bitmine pivoted to Ethereum on the 30th of June 2025. raising $250 million via a private placement to launch an ETH Treasury, although it still operates as a Bitcoin miner. What's crazy is that this announcement caused its BMNR stock to go interstellar, gaining over 3,600% in the week that followed. That's the sort of gains you'd expect to see in a meme coin, not a stock that's traded on the New York Stock Exchange. According to Chairman Tom Lee, the reason for Bitmine's pivot is because he sees stablecoins as, quote, the ChatGPT of crypto, adding that, quote, Ethereum is the blockchain where most stablecoin payments occur, so ETH should benefit from this growth. The logic is almost flawless, though I can't remember the last time I tried chatting with my stablecoins. Anyway, Lee has also offered a more controversial reason for Bitmine's ETH focus, comparing the company to Strategy. In his words, quote, such sizable holdings has created a sovereign put for the company, meaning a nation-state views MSTR holdings as attractive if a nation ever wanted to acquire 5% of the Bitcoin network. Similarly, ETH Treasuries, which accumulate 5% of ETH supply, can benefit from a similar Wall Street put. Talk about saying the quiet part out loud. Now, notably, Bitmine plans to fund its ETH accumulation through a combination of methods, including reinvesting cash flows, leveraging staking opportunities, and capitalizing on market volatility, i.e. buying the dips. So far, Bitmine has made 6 ETH purchases, the first of which took place on the 13th of July, when it spent roughly $500 million to acquire over 163,000 ETH, just days after that aforementioned $250 million raise was finalized. A week later, on the 20th of July, Bitmine purchased another 137,000 ETH, and 7 days later bought another 266,000. Bitmine then pumped the brakes somewhat on the 3rd of August, purchasing just 58,000 ETH, but went full throttle a week later, buying 208,000 ETH on the 10th of August. Its latest purchase came 2 days after that, scooping up an impressive 317,000 ETH. So, at the time of shooting, Bitmine holds 1.2 million ETH, worth about $5.2 billion at current prices. Crazy, especially considering the company now holds nearly 1% of ETH's total supply. And not only that, but Bitmine announced plans to accumulate a staggering $25 billion worth of ETH for its treasury. Now, this news sent BMNR stocks soaring by over 62% and helped push ETH's price to nearly $4,500, levels not seen since December 2021. What's crazy, though, is that Bitmine will likely accumulate this ETH at a rapid rate, and that's simply because it seems to be in a highly competitive arms race with the next Ethereum Treasury company in today's video. This naturally brings us to the second largest Ethereum Treasury company, Sharplink Gaming. Now, Sharplink is a publicly traded company that was actually founded way back in 1995 as a sports betting and online casino marketing company. On the 27th of March 2025, Sharplink unexpectedly announced it would raise $425 million through private placement equity to become an Ethereum Treasury company. If you've been following the crypto headlines, you've probably seen Sharplink mentioned more than any other Ethereum Treasury firm, and that's mainly because its board chairman is Joseph Lubin. For those unaware, Lubin is one of Ethereum's 8 co-founders. He later went on to found Consensus, which builds much of Ethereum's infrastructure, including the popular MetaMask wallet. Notably, Lubin has stated that Ethereum Treasury companies are vital for the ecosystem and plans to accumulate ETH faster than any other firm. The announcement sent Sharplink's SBET stock soaring over 3,000% in a single week. A few months after the initial $425 million raise, Sharplink filed with the SEC to sell $1 billion in stock, mostly to buy more ETH. However, this spooked investors, crashing SBET's price by roughly 92% after its 3,000% rally. Ouch. And this ties into how Sharplink funds its ETH accumulation. The company primarily uses a mix of private investment in public equity, or PIPE rounds, and at-the-market, or ATM, stock sales. Since its strategic shift, Sharplink has been laser-focused on accumulating ETH, earning it the nickname of Ethereum's strategy. And just 2 weeks after announcing a $1 billion stock raise, the company bought $463 million worth of ETH on the 13th of June, becoming the largest public ETH holder at that time. And with many traditional SBET investors shaken out, the stock has been steadily recovering. After its almighty crash, Sharplink made another $30 million ETH purchase via ATM stock sales on the 24th of June, adding that it had staked all of its accumulated ETH so far. This caused SBET to pump by over 300% before a retracement, though it remains in an overall uptrend. And this rally was further boosted by Sharplink's ETH buying spree from the 28th of June to the 4th of July, during which it accumulated roughly 7,600 ETH. Sharplink's most impressive purchase, though, came on the 11th of July when the Ethereum Foundation, the non-profit supporting Ethereum's development, sold 10,000 ETH to Sharplink at a steep discount. Since then, Sharplink has ramped up its buying, regularly accumulating ETH to stay competitive. As I record this, it holds just under 600,000 ETH, valued at $2.78 billion. As for how much it plans to buy, well, remember that $1 billion equity raise? In mid-July, Sharplink announced it would expand this to a staggering $6 billion. And given the competition between Ethereum Treasury companies, this number could grow even further. And this ties into the third largest Ethereum Treasury company, which is a new entity called the Ether Machine. It was formed in mid-July through a merger of the Ether Reserve and Dynamics Corporation, which has yet to be finalized. Once finalized, though, the Ether Machine plans to trade publicly under the ticker ETHM by Q4, replacing the current Dynamics ticker DYNX. And intriguingly, the Ether Machine's co-founders, Andrew Keys and David Merrin, both held high-profile roles at Consensus, the same company founded by Sharplink's Joe Lubin. Despite being new to the scene, the Ether Machine has started strongly, noting that it wants to have one of the largest on-chain ETH positions. It plans to raise $1.6 billion to buy ETH by Q4, generating additional returns through staking, restaking, and DeFi participation. So far, the company has made 3 purchases of ETH, the first of which was the largest by a wide margin. This was towards the end of July when the Ether Machine bought almost 320,000 ETH. Since then, the firm has made another 2 purchases, at least at the time of shooting. The first was when it spent $57 million to buy 15,000 ETH on the 30th of July, which was done to celebrate Ethereum's 10th birthday. It seems 10th birthday parties have gotten far more expensive since I had mine. Anyway, traumatic childhood memories aside, the second ETH purchase was made on the 4th of August, when the Ether Machine bought 10,000 ETH for $40 million. And this brings its total holdings to over 345,000 ETH, valued at more than $1.6 billion. However, we can probably expect this to grow fast in the near future. That's because so far the company still has a good chunk of its initial $1.6 billion raise remaining. A recent blog post reveals that the Ether Machine has roughly $400 million on the sidelines, which at today's prices could buy around 80,000 more ETH, give or take. Icing on the cake. Okay, the fourth largest Ethereum Treasury company is BitDigital. In case the name didn't give it away, BitDigital is another company that was originally focused on Bitcoin that recently shifted its focus to stockpiling ETH. Originally founded in 2017 as Golden Bull Limited, a car rental company in China, it pivoted its business in 2020 by acquiring Bitcoin miners to become the Bitcoin mining company BitDigital. Notably, it also mined ETH back then, while Ethereum was still a proof-of-work blockchain. Since then, the company has explored several avenues. In 2023, it started renting cloud-based GPU services to AI firms and began earning rewards through ETH staking. However, it wasn't until June this year that BitDigital exited the Bitcoin mining business to focus on becoming an Ethereum Treasury firm. To achieve this, the company is repurposing existing assets to accumulate ETH, including selling its Bitcoin mining operations and using the proceeds to grow its ETH holdings. It also plans to sell shares to fund further purchases, and its high-performance computing, or HPC subsidiary Whitefiber, has filed with the SEC to go public. In late June, BitDigital announced it would sell $150 million in shares to become a, quote, pure-play Ethereum staking and treasury company. Its stock, BTBT, dropped about 15% on the news. However, in early July, BTBT doubled after Bit Digital spent $172 million to acquire 100,000 ETH, making it the second largest publicly traded ETH holder after Coinbase at that time. The company then added another 20,000 ETH in mid-July, and this brings its total ETH stash to over 120,000, which is worth $566 million at the time of shooting. The company hasn't explicitly stated how much ETH it plans to buy or how much it plans to raise to accumulate more. However, it did issue a press release saying that, quote, "We are starting with exposure to over 100k ETH for now, but we intend to aggressively add more so we become the preeminent ETH holding company in the world." Fighting talk, you gotta love that. And this brings us to the fifth largest ETH treasury company, ETHZilla, which has to be one of the coolest company names in all of crypto. The company was previously a biotech firm known by the far less based name of 180 Life Sciences and was established in 2007. In July this year, the company rebranded to ETHZilla after securing $425 million in private funding to build an ETH treasury. The raise involved over 60 institutions and crypto-native investors, including Polychain Capital, Harbour Island, Etherealize co-founders Danny Ryan and Vivek Raman, and Electric Capital, which also serves as the external asset manager. Beyond the $425 million raise, the company plans to raise an additional $150 million through debt securities to support its ETH accumulation. ETHZilla will use this ETH to earn rewards via staking, lending, and liquidity provision, aiming to generate yields that outperform plain old ETH staking. To support this mission, ETHZilla launched the DeFi Council, consisting of Etherealize members and other major DeFi players, to advise on growing its ETH treasury. Oh, and by the way, you can learn more about how Etherealize is supporting Ethereum's adoption by checking out our video on it right over here. Anyway, ETHZilla's stock, ATNF, initially reacted negatively to the news of its new Ethereum strategy, falling by around 28% on the day. However, on the 12th of August, it was revealed that tech billionaire Peter Thiel had acquired a 7.5% stake, sending ATNF parabolic. In the days that followed, the stock rallied over 400%, though it has since retraced somewhat. At the time of shooting, ETHZilla has made just one purchase of ETH, spending $313 million on the 12th of August to acquire over 82,000 ETH. At today's prices, that puts its treasury at over $387 million, and it's safe to say this is just the beginning. Logically, this means the company still has around $112 million left from its original $425 million raise, plus an additional $150 million it still plans to raise. So then, this leads us to what you've all been wondering. What does all of this mean for ETH's price? Well, to figure that out, let's first do a bit of quick maths. Collectively, the 5 largest ETH treasury companies have accumulated 2.3 million ETH so far. That's just under 2% of ETH's total supply, which at today's prices is worth over $10.2 billion. And that's just the top 5. According to strategicethreserve.xyz, all ETH treasury companies collectively hold over 3.5 million ETH, around 3% of the total supply, worth roughly $16.8 billion. And don't worry, we'll leave a link to that resource in the description below. And because we love maths here on this channel, we can even work out the total amount that each company plans to raise, how much they've spent already, and tally up the remaining funds to get a ballpark figure of how much ETH could be accumulated in the future. Relax, we've already worked this out for you. We're nice like that. So, collectively, the top 5 Ethereum treasury companies intend to raise around $33.1 billion and have already collectively spent $9.3 billion. This means there's still a whopping $23.8 billion that could be spent accumulating ETH, which at today's price would equate to around 5 million ETH. This would bring the total amount of ETH held by all Ethereum treasury companies to 8.5 million, which is 7% of the total supply. Note that this is a ballpark figure and these numbers could change in the future. The point is, though, you don't need to be a genius to see how massive this is for ETH's price. It could easily be the catalyst that pushes ETH to new all-time highs. Almost every other day, a new ETH Treasury company seems to emerge, eager to get a slice of the pie, eerily reminiscent of the wave of Bitcoin Treasury companies we've seen over the past year. Of course, this also means that the same risks apply, specifically that the MNAV for these companies turns negative. This could cause investors of these companies' stocks to be at a loss, causing them to not trade these stocks at all until things recover, or even sell them. If this happens, these ETH Treasury companies may be forced to liquidate some or even all of their ETH holdings to meet their financial obligations. This would create a major headwind for ETH's price. Put simply, it would signal that the model isn't working, likely triggering panic selling among other investors. The caveat, however, is that ETH's rally is still in progress, and the growing demand from Wall Street is likely to help sustain it for the foreseeable future. As such, even if a company's MNAV is temporarily low, the impact is mitigated as long as ETH's price continues to climb, which again seems likely to happen in the coming months. It's also worth remembering that ETH offers companies multiple yield-generating opportunities, which can help grow their MNAV even further. This arguably gives them an edge over their Bitcoin counterparts, as BTC doesn't provide the same flexibility. As such, we believe the likelihood of an ETH Treasury company collapsing appears minimal, at least for now. Once ETH reaches its cycle top, the success of these treasury companies will largely hinge on how effectively they manage their reserves. If handled well, there should be little cause for concern. If mismanaged, well, I don't even want to think about it. Honestly, it's taken a long time to feel genuinely bullish about ETH's potential again, so let's just savor the moment while it lasts, shall we? Okay, if you enjoyed that video, folks, smash those like and subscribe buttons to show it some love. If you want to learn more about the top Bitcoin treasury companies, then check out the video right over here. And if you want to see how to position yourself as Bitcoin dominance continues to fall, then check out the video right over here. Okay, thank you all so much for watching, and I'll see you next time. This is Guy, over and out.